Welcome to DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
What's going on, guys? Real quick break for the DeFi by Design podcast sponsors and the DeFi Slate sponsors who make this all possible. First, we have 𝗵𝗶𝗴𝗵, a money market protocol that allows you to borrow and lend and leverage your assets to earn interest, right? So if you want to deposit some stable coins in there, currently you can get 3, 4, 5, 6, 8% APYs on stable coins, which oust any bank in the world. As far as we're concerned, you can deposit any Ethereum-based asset that is listed there, borrow against it. You can borrow stablecoins. You can borrow other assets like ETH or 𝗹𝗶, Link, even the 𝗵𝗶 token itself. 𝗵𝗶 is the go-to protocol for any sort of borrowing and lending. Check it out at app.𝗵𝗶.com. The next one we have is 𝗃𝗃𝗃. 𝗃𝗃𝗃 is a new crypto wallet, 𝗃𝗃𝗃.com. You can store all of your crypto there. They have quite a few options. They're integrating new DEX features soon and allow you to have a non-custodial way to store your crypto safely off of centralized exchanges and also just not in a MetaMask or in your own ledger. A bit of extra security there. Next, we have 𝗵𝗶𝗃. 𝗵𝗶𝗃 is a decentralized perpetual swap protocol, basically allowing you to trade on leverage on the Ethereum chain, right? They're coming out with V3 very soon. By the time you're listening to this, it might already be out. They are a super solid team, and they're pumping updates and allowing you to trade decentralized perpetual swaps on ETH, Link, and a few others, all on Ethereum, all decentralized. So that is 𝗵𝗶𝗃. Next, we have 𝗵𝗶𝗴. 𝗵𝗶𝗴 is a decentralized stablecoin. It's an algorithmic stablecoin that is pegged to the purchasing power of commodities. And then basically, it measures what value $1 buys in terms of a commodity index each week. And then it provides you with essentially a store of value that allows you to continuously evade inflation while maintaining, a stable aspect as if it was $1. And that is the 𝗵𝗶𝗴 protocol. Check them out on Twitter. Finally, we have Diversify. It is an L2 decentralized exchange. They allow you to basically trade in a gasless and feeless manner, big volumes, whatever quantities you need. It's almost like a centralized exchange on Ethereum, but you are the custodian. They do not hold your coins as a centralized exchange would. You have full control, full power. So really, it's almost like a centralized exchange capabilities on a decentralized exchange, and that is Diversify. All those sponsors make this possible. I know it's a lot to take in, but thank you very much for listening, and let's get back to it.
Welcome to episode 31 of the DeFi by Design podcast. It is Tuesday morning, and Ethereum gas prices are over 300. What a great way to wake up. I actually went hunting this morning. It was awesome. Maybe I'll talk more about that later, but we are here today with Ben. Ben has an interesting story to tell you guys about how he got into DeFi, what he's up to now, and kind of we're going to go into so many different things here that are prevalent in the current ecosystem and in with the times. I'm here with co-host 𝗵𝗶𝗃𝗃. What's good, Robbie? How you doing, buddy?
Yo. Happy 420. Hope everyone is having a great time listening to this podcast. So I'm super stoked to talk to Ben. He's right around our age group, so it's interesting to always talk about people that are kind of peers when it comes to the DeFi lifestyle. As always, it's a beautiful day in Florida. Everything's going well. Markets maybe not so hot, but the gas fees are basically holding everything up, and no one can trade, and no one can sell, and no one can buy. So we're going to talk a lot more about gas fees, layer 2, and all that good stuff with Ben, and I will kick it over to him. How's it going today, Ben?
It's going great. Thanks so much for having me, guys. Really a pleasure.
Yeah, man. So what's your elevator pitch for your story? How did you get into DeFi? What's your skills? Kind of where's your interest lie? Who is Ben Simon?
Who is Ben Simon? Well, I got into DeFi relatively recently. I guess a lot of people have been getting in even more recently. So I'd say this past summer around, May or June, I had recently, in lockdown, gotten reinterested in Bitcoin specifically. I'd actually learned about Bitcoin in late 2016, early 2017 while I was on my gap year before college. And it was pretty interesting to me at the time. Learned about Ethereum as well. Really focused on those two. Didn't really get so much into anything else besides that. So thought all the sort of ICOs and things that were being built on Ethereum weren't necessarily so useful. But was really drawn to the economic potential of Bitcoin specifically. And then Ethereum was this sort of really cool concept of, the smart contracts, but I don't think I fully understood it. But then I guess fast forward a few years to March, April, I sort of got reinterested in Bitcoin during lockdown and was reading a lot about Bitcoin and the halving. And I think at a certain point when you're interested in Bitcoin, you sort of get bored because there isn't that much, there aren't that many new things that are written about it. There's of course a lot to be done in terms of institutionalization and building sort of infrastructure around it. And I think there are like a few really good people who write about Bitcoin in novel ways, my friend Nick Carter among them. But for the most part, I think a lot of Bitcoin writing and thinking is really just like, oh, this new billionaire bought Bitcoin or this new institution bought Bitcoin. There isn't that much new stuff. And so when I learned about DeFi first, it was actually on a podcast when I think there was a debate between Alex Peck, formerly of Dragonfly, and Pomp. And they were debating ETH is money. And that point wasn't really so interesting to me. But the point that was interesting was this point that Alex Peck made about decentralized exchanges. And the point was basically this, Bitcoin is awesome as this monetary asset, this decentralized, permissionless monetary asset that provides, a good store of value similar to gold. But what good is it really if it's sort of plugged into this centralized financial system where you have these banks that are too big to fail, and there's a lot of moral hazard and a lot of centralization and corruption that doesn't really allow players like us to have a fair shot. And Bitcoin is great, but does it really solve all the problems? And I was like, that's a good point. And then Alex brought up that even just sort of this simple point of decentralized exchanges. Like, why do we want to trust Coinbase and Binance with our keys? And I've actually come around since then a little bit more to the idea of custody being important to have centralized, but like this was sort of a light bulb moment, a watershed moment for me, because I was like, yeah, it makes sense to have, why do we just want this monetary asset to be decentralized? Why not have the whole financial system sort of follow under this ethos? And that was sort of this main turning point for me, after which I started exploring DeFi pretty deeply with really all my spare time.
Go down the rabbit hole, dude, and you just don't come out.
Exactly. You start trading a little bit on Uniswap. You start, getting your first loan on Aave or Compound. It's just like, it's totally mind blowing. And then, once you start playing with these, actually working applications, which to me was really important, because I remember from 2017, 2018, reading some white papers and thinking that these things were cool, but they were just white papers. But I was actually able to use, Uniswap and Compound, Aave, 1inch, and that was very cool to me. And then also just digging into the incentive designs and mechanism design behind them. That was even cooler, frankly. There's just this wealth, this oasis of information. If Bitcoin is awesome, but it's really kind of a desert of new things happening. And then, DeFi is this oasis of, new information, new incentives, new data to just play around with. So that was what drew me in, frankly.
As much as like Dentacoin and some of these other like just fake utility coins that claim to have utility, like you're never going to really use them. They need a super wide network of adoption to even get some sort of use case. So yeah, I agree with you that like it's only been recently that these decentralized applications have had really any utility value once tangible people can start using them and they start generating transaction volume, and then that's been DeFi. And we've seen a little bit of a different industry take over with the NFTs, and that's not so much DeFi, but it's still a more valiant use case than some of the other just ICOs that wanted to have a use case so that they weren't considered securities back in 2017.
For sure. Yeah. And I think like the question of, needing a token and, what the purpose of utility tokens, the purpose of governance tokens, I think these are still actually somewhat unanswered. I think it's clear that a lot of the DeFi boom, you can actually thank, Comp and Balance are launching governance tokens for a lot of the sort of interest that has poured in because of the monetary, the sheer upside that you could get from yield farming and from sort of speculating on these tokens. So I think like really, these are some of the things that kickstarted, but the long-term viability of having, tokens and their value accrual and, fees for governance tokens or utility tokens, which, for networks, for example, I think those are still not necessarily closed questions. They're still somewhat unanswered. I think we'll see, down the line, what happens from like a regulatory standpoint, what happens from a value accrual standpoint, whether we see sort of fee undercutting. One interesting thesis with regard to like AMM specifically is, what happens when maybe the technology will always be somewhat different between the AMMs, but with open source, it's possible, it's conceivable that in some future state, the AMMs will sort of converge to some sort of like unified technology. And then what happens is basically fees will probably equilibrate across the different platforms because, if one platform is charging, X number of fees, and another platform could just undercut that. And then if that's the case, potentially fees could be driven to zero. And I mean, that's the potentially the naive case, because there's also the argument that, well, you need communities, you need sort of incentive alignment between communities. And there really is stuff that needs to be voted on by governance that is like a real service. But I mean, there's, I think, still debate in the sort of crypto space among very smart people about the need for tokens versus, I think tokens are necessary, but the question is sort of the ubiquity of tokens and like how, does every single protocol need a token? Does every single, primitive in DeFi require a token? I think those are still, as I said, sort of unanswered. And we'll sort of see in the long run. I think they're really important now, especially for incentive alignment and for sort of drawing speculative interest into the space. But we'll see in the long run, like how necessary they actually are.
Yeah. Well, you mentioned kind of different protocols undercutting each other. And then that competition driving fees all the way to zero. And that's pretty much what we've seen in the traditional broker-dealer space. Robinhood came out with commission-free trading, and then all of a sudden, every broker ended up offering commission-free trades. So I think that's definitely a possibility. And one of the paths to get there could be Uniswap 3.0. I haven't dove super deep into what those possibilities are and what they unlock, but my understanding is that they would act as an aggregator and start to kind of bridge trades across a bunch of different dexes. And if that's the case, you can always route trade to the cheapest scenario. And I think that's a real possibility, is the competition between dexes pushing fees all the way to zero.
Yeah, I think it's a good point. I think, even there already exists, Matcha, 1inch, Paraswap, all these aggregators. And, even though it's more costly to use aggregators right now, for example, if you're just trading something that has relatively similar slippage on Uniswap or SushiSwap versus on 1inch, you're better off using Uniswap or SushiSwap because of the gas fees that come from, aggregator routed trades. But that might change going forward with L2s, such that, aggregators are going to become really the primary front end for almost all trading. I think it's interesting to look sort of right now, if you put this in sort of traditional economic terms, you don't really have like pure competition when it comes to the dexes. You have sort of monopolistic competition in the same way that Apple can price their iPhone above an Android phone because there are these specific differences among it. It's not like they're just pure substitutable goods. I think, Uniswap versus SushiSwap versus Bancor versus Balancer, there are sort of minute, but also very important differences between them. Bancor has this sort of impermanent loss, insurance platform that they can do because of the fact that they have a network token, BNT, that they can inflate at will to sort of subsidize liquidity providers that might suffer impermanent loss in the short term, and then use fees and burning BNT in the long run to make up for that. And that's different than, for example, what Uniswap is offering with V3, which is sort of this sort of dynamic liquidity provision, which I think is going to be really interesting to see how it works. And the market making that's sort of going to be done with it. And that's also different from, SushiSwap, which is building bento, and it's maybe potentially more retail focused. So there's still sort of slight differences between them. And so I think this long run thesis of convergence is probably, that's also I think a questionable thesis. I think I'm just sort of throwing out potential ideas for how these things could happen. I have no real conviction though that ultimately all these dexes are going to converge on one design. But I do think you're right to say that you can looking at the aggregation layer, especially as we sort of move to, layer 2s and sort of, or layer 1s with more throughput, that the aggregation layer is going to become even more important, and that will probably push fees down. And you'll have this sort of similar trend that you're just talking about in terms of the sort of traditional brokerage undercutting and sort of pushing fees down, like with Robinhood, et cetera.
Yeah, 𝗏𝗏 wrote a pretty dope piece about AMMs. He's starting some new series. It's a writing series affiliated with some pretty big company in crypto. I forget what it is.
Paradigm, yeah.
Yeah. And he was writing about 3 tips to lower your expenses basically with gas. And one of the biggest ones was the aggregator, especially if you're a bigger trader. Definitely helps because the cost of using using Ethereum is obviously it reflects in a linear way. So it doesn't matter if you're at $1,000 trading or $1 million, it's still going to cost you the same to get that block space. So basically being able just to pay a bit more in gas to get much less slippage on these aggregators is huge for anybody who's trading with a decent bit of size. And honestly, another serious point that he made was and Ben hit on this earlier about the custody of assets. And I've kind of had this same turnaround after being so fully like DeFi only. And now I'm like, wait, trading on centralized exchanges will get you oftentimes the lowest fees and the best rates compared to what is offered in DeFi. So there's all sorts of arbitrage opportunities available. Again, usually if you have size, they can bounce back and forth from. Super interesting point. And the last thing that I want to bring up, because I waited so long, this was such a good conversation about the token and the non-token protocols. B protocol is probably the most successful protocol in DeFi right now without a token. There might be one that's obvious that I'm missing, but I truly believe with over, I think 100 mil, 200 mil total value locked, a metric F ton of users and activity on the governance forum in DeFi, in Discord and in Telegram. Guys, B protocol will help you with your MakerDAO loans. Basically, they act as like a liquidation engine, if you will, for DeFi, and specifically for your Maker loans. So you can actually transfer your Maker loans to B protocol and earn yield and effectively be less. I don't want to say less risky, but you could hedge some of your MakerDAO risks using B protocol, which in and of itself entails more risk. But I think it's good to highlight that protocol as one of the key protocols that has not launched a token quite yet. I mean, I think they're about to, but they've done a very good job up till now of just having a fully fledged protocol.
For sure, yeah. I mean, I also just briefly going back to a couple of points you made, I think it's really funny. Like, I have friends who, depending on the size of what you're trading, they'll actually prefer to use Uniswap over Curve for their stable swaps. It really depends on like whether you're trading like a ton of size and like what the liquidity looks like on Curve versus Uniswap at that time. But because Curve's transactions are more gas intensive, and depending on the price of gas, you might actually be better off when you sort of factor in gas trading on Uniswap, even though Curve's curve is much more friendly to stable swap trades. And that goes for other things as well. It's kind of this ironic thing, and people will just assume that Curve is the best place to trade stablecoins, and that might be true in a vacuum. But when you factor in the price of gas, that has been, well, factor in Curve's gas intensive trade mechanism, then also the rising price of gas, it actually almost sometimes comes out to be cheaper on sort of on Uniswap. Constant product AMM. Yeah, exactly. Constant product.
Guys, just heads up, like it's probably about 2.5 times the cost on Curve from my experience than Uniswap. It's obviously, it varies, but Curve is definitely a gas intensive place. Like, yeah, I'd say 2.5 times.
And this is also an interesting point because it really does depend on the size that you're trading. And this is something that I think people know intuitively, but gas prices, what they do is they pose a regressive tax on users. So the higher size that you're trading, and this is obvious, but it's like, I think worth spelling out, because you'll see a lot of people, a lot of the big whales who actually aren't as bothered by high gas prices. And that's because gas transaction fees are a regressive tax. They hurt smaller users more than they hurt bigger users because they basically form a larger proportion of the smaller users' trades. So for example, when Arthur from Defiance is talking about, he actually had a podcast on Up Only, I think it was like a month or two ago, and he was talking about, like the trade-offs between Ethereum and other L1s. And he was like, look, like, if Ethereum is basically like this big metropolis that's like, Manhattan or Singapore or Hong Kong, and, you want to pay more because, yeah, it's going to be more congested, but there's more going on, and you pay more for decentralization, you pay more for all these, attractions, I guess, that you could get while living in those cities. And he was right. It's like a pretty good analogy, like to compare Ethereum, especially with its congestion, to sort of maybe smaller rural areas or other cities. But I think it's kind of ironic because Arthur is obviously a whale, and he can pay more, but it's for him, it's like, not even thinking twice about it. He doesn't have to think about gas prices. But for the smaller user, when I got this friend of mine from Stanford, who's this really incredible CS student, he picked up DeFi really fast. He understood it. He understood the value proposition very fast. But I sent him like an ETH or two to play around with, and it was just wild to see how much he struggled to find like gas efficient ways to transact and to experiment. And I was almost at the point with just to tell him, like, just go play around on BSC instead. It was really difficult. And I think so for people like Arthur, for whom, gas prices, not only are they regressive in the sense that they don't hurt him as much proportionally, but he also just has a lot more money to spend. Like he doesn't necessarily care about it, doesn't actually affect his day to day. But I don't think we want to enter a world where, we just have this segmented, wealthy people transacting on Ethereum and then the rest of the people transacting on other L1s. I think that would be, that kind of network gentrification, for lack of a better word, is really not what we want. It's like sort of undermines the entire promise of like having Ethereum, having sort of DeFi in general. So I think this is really like a crisis. You've been talking, I think, a lot about this on prior podcasts. A lot of people are talking about this on Twitter right now, but it really is the issue of the day. And I think for good reason. Like Ethereum is, it's as great as things are, it's also kind of in a state of crisis with these gas prices.
Ben, you brought up the analogy of kind of metropolis cities living on Ethereum. Kind of big cities, there's more to do, so you're willing to pay more. And I've heard the same analogy be applied to ETH 2.0. So right now we're in the beacon phase, right? Phase 0. But we're transitioning into that sharding phase. And my understanding is that once these validator nodes are set up, we're in phase 1, and then phase 2 is ultimately splitting up the Ethereum chain into shards. And I think Vitalik said there's going to be 64 different shards. The number is kind of irrelevant, but you'll have one shard that'll be really this major metropolis, and it's only for like flash loans, really high gas intensive contracts that need to get transactions through very fast, and they're willing to pay extreme amounts of gas. And keep in mind 1559 here. Basically, if that goes through, everyone would pay a base fee, and then these gas intensive transactions, we would see a tip to these miners ramp up. So basically, on these shards, these metropolis shards, we have very high tips, and the transactors are willing to pay that. But then, on all these other shards, you're kind of scaling down the gas because you don't have as much necessity to push those transactions through very fast. So yeah, I completely agree with you that Ethereum right now is kind of one major metropolis, and then you have these other L1s that are more, in the
they're kind of like the shards for now, if you will.
Right. The other L1s are kind of like those lower shards. But I think once we kind of hit ETH 2.0, we might be able to see all of that scale into Ethereum, where we have metropolises, and then some not
major
not so
point
major
is
cities.
Once we hit 2.0, which at this current point is probably, God knows, could be 6 months, 2 years, 3 years, right? The point is there's being development happening, and what you're saying is exactly kind of how I think we should think about using funds in blockchains. If we can put funds that have that are in blockchains that have less throughput, less decentralization, but are cheaper, and we can risk X percentage of our funds there, right? Then boom, it becomes, a profitable thing and a way to decentralize your funds. So Ben, I'm kind of curious what you at your current position, with which we haven't even touched on yet, guys, is I take it you are an analyst and a sort of big time role player at is it Mechanism Capital?
Yeah, it's Mechanism. Yeah, so I wear different hats at Mechanism. We're not a very large team, which is great. It means that we all do a lot of stuff, and I think it's allows us to be pretty nimble. I guess I sort of head the research side. I mean, Andrew's prolific in terms of coming up with research, but he's involved in a lot of different things. Like the venture deals, the trading side, and I would say take most responsibility for the research, although even though we all contribute to it, and even Eva, actually, who recently joined our team, put out a piece on PancakeSwap last week. But so I do a lot of research, and then I also help on the private market side as well, sourcing deals and evaluating deals. So those, I'd say, are my two main roles. Less sort of on the, I guess, also on the public market side, when we do take sort of venture-esque positions in publicly traded tokens. Rune is a great example. ESD in the past, YFI. Cream, those are sort of some of the sort of core positions that we've taken that are sort of venture stage. And so, we treat those as, in some ways, even though we could theoretically trade around them, oftentimes we treat them more as venture holds. We also do some trading as well in like catalyst-driven events or event-driven catalysts, whatever the proper lingo is.
Yeah, kind of like more short-term and whatnot, yeah.
Exactly. But we like to focus our sort of core competencies. Our core competencies are sort of on the venture side. And so we do a lot of private market investments, and we also do a lot of research as well. We like to try to do a lot of research. So I like to dig into specific verticals. Whether there's algorithmic stablecoins, AMMs, insurance, and then I think more recently L2s, which I guess are not really DeFi specific, but I think are really, really crucial for DeFi.
Big time L2s. You're exactly the guy for the question, which thank you for explaining kind of how you guys view, your portfolio. There's some knowledge to be taken for that for somebody who's trading with $5,000 or somebody who's trading with 50 million, right? There's kind of a shared, there's way different strategies for those amounts, but there's a shared way to kind of look at it. And I appreciate you sharing kind of your mental model. And I'm kind of curious what we have with the Mechanism Capital team and outlook as far as the current issue that we were just touching on. So Rob just told us all about what ETH 2.0 looks like in the future. We've hit on some other L1s. We've talked about a bit prior to recording about all sorts of rollups and even on the loop ring front. So the question is, I'm curious, what is the mental model kind of facing the problem of Ethereum L1 scaling? And basically, what is your personal, and it could be also tied to what the Mechanism team is doing. What's the solution for active investors in DeFi? How do people get around gas fees, and what's the mental model for it?
Of course, yeah. First of all, it's a good question, and I think actually one of the things I love about Mechanism is that there's a lot of vibrant debate among the team. So, for example, I would call myself something of a rollup maximalist. I'm very interested in rollups. The more I've dug into them, the more I've become bullish on them. I think I'm particularly interested in optimistic rollups because I think those are sort of network ready, and we'll be seeing them rolled out, no pun intended, over the next few months, versus ZK rollups, which I think also have a lot of promise more long term. But I think from everything that I've read, are sort of not. I think for gas, I guess computational reasons, they're sort of not really network ready in terms of actually bringing down gas fees the amount that optimistic rollups can. Even though I think there's some specific advantages of ZK rollups that we can get into. But I guess, as much as I think a rollup maximalist, there are others on the team. I think we disagree. And so I think we sort of have some consensus. I think Andrew and the rest of the team are also sort of see the value in rollups. But I think, we disagree sort of on the timeline. We disagree specifically on also potentially, whether chains like Binance Smart Chain, for example, are going to be long-term viable. And I think, it's been really helpful to sort of debate, discuss, and sort of bounce ideas off of the rest of the team because we have these differing perspectives. And it doesn't actually, I don't think, impede our ability to invest. If anything, it actually, I think, helps because we have sort of this internal running debate about, the future of Ethereum scaling. And if we just had this sort of tunnel vision approach to okay, we know it's going to be, rollups and everything is going to be on Ethereum. There's nothing going to be on any other L1s. I think that would actually probably be, that'd probably hinder our ability to actually invest optimally. And so, I guess broadly speaking, I'm a rollup maximalist. I do think there's actually going to be a place for sort of other L1s. I think that, I guess I would sort of split this question up into short, medium, and long term. And I think this is also sort of how we think about it as well. So sorry, what can be done now, I suppose, and then what do you foresee, in the next few months, and then as you're saying, long term, Sure, of course, yeah, and I think these are sort of where we converge as a fund. I think we sort of agree on the short term that there are these other chains, specifically Binance Smart Chain has achieved real traction and usage. I think first the reasons why are actually kind of interesting if you want to look really deeply into it. So, for example, Avalanche has been live for a little while. Solana's been live. I've used Avalanche. I've used Solana. But by far the best user experience is Binance Smart Chain. And I think for actually kind of funny reasons. Part of it is the throughput, part of it is the low fees, but you get that actually on Avalanche and you get that on Solana too. But I think there's also an ease of use that you can access Binance Smart Chain through Binance. There's sort of an easy centralized exchange bridge. I think there's also BSC scan is sort of underratedly one of the main drivers of sort of the stickiness of Binance Smart Chain, because I don't know if you've ever tried using Avalanche or Solana or for example, even Matic, Polygon, but the explorers on those are really, to me, they're at least unfamiliar. They're kind of foreign. And so it's much more intuitive for me to use Binance Smart Chain. But I think BSC has managed to attract a lot of real usage, and I think it's not going to go away anytime soon. I think we'll probably also start to see liquidity migrate, though, as Polkadot, as Solana start attracting more developer interest and more projects start launching. I'll bet we do see some kind of liquidity migration away, maybe partially from Ethereum, but also probably from Binance Smart Chain to those other chains. I think like liquidity is fickle, if we've learned anything from DeFi summer. And I think also we're seeing that, we saw that with the migration from Ethereum to Binance Smart Chain. I think it's true that a lot of new users to DeFi are actually going maybe straight to Binance Smart Chain, but I think a lot of liquidity that's there actually did migrate over. And I think, if it happened once with Ethereum to Binance Smart Chain, I think it's also more than conceivable that it will happen again from Binance Smart Chain to other chains. And I think, the people that say that this is actually not bearish for Ethereum, but actually potentially bullish, I think that's actually right, because one of the reasons why this is actually possible is of course the EVM compatibility of Binance Smart Chain, the fact that there are these bridges back to Ethereum that everyone ultimately wants. And this is going back to something that Rob was saying, maybe similar to the shards, like Binance Smart Chain, it is a layer 1, but it's not really a siloed layer 1. It really is connected to Ethereum because of its EVM compatibility, because of the sort of ample bridges that you can use, and that in a way reinforces Ethereum's strength. There are going to be interesting differences with other chains. Solana is not, for example, EVM compatible. But so we'll see how those play out in terms of whether they can actually attract true liquidity migration away from Ethereum. But I guess, getting into the question of rollups and sort of Ethereum native scaling, to me, I think
this is the long-term stuff, guys. This is all right. So BSC was the guys. If you're on Uniswap right now and you're struggling, go to BSC, use PancakeSwap, use the cheap fees, enjoy it. It'll be there. It'll work, right? Midterm, we're looking at some other L1s, but this is the good stuff. This is what we're here for, long-term here.
Yeah, and I think like there's sort of like the question is why long-term do we want to look at rollups and Ethereum native scaling? And I think the answer to that, before I even dive into why I'm like specifically bullish on rollups, but the answer to that, I think, is that ultimately I think rollups will probably start off a little bit clunky. I think the user experience won't be like extremely seamless to start. Sort of cross-chain solutions like Connects and Hop sort of as generalized cross-chain infrastructure, and then more specifically like Maker's Bridge from Ethereum to Optimism. Rari Capital is working on conditional withdrawals. That's what their 𝗵𝗶𝗴𝗵 protocol is. But I think those solutions, all these sort of very specific, cross-chain fast withdrawals for rollups, specifically for optimistic rollups, these things are going to take a little bit of time to actually be usable, and rollups themselves are probably going to have some sort of clunkiness in the initial rollout, I would imagine. However, like we have to, I think it would be myopic to say that because there will be some UX issues with rollups, inevitably, that will hinder its long-term adoption. I think it's true that BSC is very usable now, but eventually we'll be able to say, all things being equal, what would you rather use? And I think eventually, like all things being equal, will be that the throughput will be pretty similar on rollups to BSC and other L1s, the low fees, and I think the usability will also be relatively equal between sort of competing L1s, sidechains, and then rollups. And then ultimately, what it's going to come down to are the security considerations. So I think it's true right now, like there will be differences in usability, and there will be these other differences in the short term, and that will sort of, I think, give these other L1s and sidechains a sort of fighting chance to stay ahead of rollups. I think ultimately any kind of usability problems will be sort of smoothed over, especially as we sort of migrate to ETH 2.0 and the rollups become sort of more entrenched. And I think eventually, sort of in the long term, a lot of the main development and the main usage is going to stay on Ethereum. And I think also here, I put a thread out there about this the other day, but I think a lot of people like to ask the question, okay, what does the average user think about when it comes to using X, Y, or Z DeFi app? And that's a question that people ask. They say, well, of course, the user wants to think about, throughput and fees. And so for that reason, they don't really care about decentralization, which is this sort of, buzzword, but doesn't really mean anything. So they will be willing to go to BSC. That's fine. First of all, I think there are plenty of users who I wouldn't fully cede that answer. I think there are plenty of users who do care. But even if I were to just cede for the sake of argument that, users really only care about low fees and like, and time and usability, like those three things, if that's actually the case, that still isn't the case that developers and the best developers care about that, because the developers actually do care about security and decentralization. They don't want their protocol to be sort of on a chain that theoretically could be corrupted and hacked and taken over maliciously. If they're building on a chain that has 20 validators, for example, there's a lot more security risk, systemic risk, and then by extension, risk to that specific protocol. And even if individual users don't care about that, because that's sort of the second order risk that is sort of down the line to them, and they just want cheap transacting, I think the best developers will care about that. And sort of that I think will inhibit a lot of the best development from happening on chains that are pretty centralized. I don't know. So that's sort of my broad thesis about why I think rollups eventually will take the sort of will win and sort of over probably these other chains. I think it's possible. It's always possible. I don't want to be dogmatic about Ethereum. I think there are a lot of Ethereum maximalists and nationalists. I do think it's possible that we could see migration to another chain. I think if it happens, I think it actually won't be to something like Binance Smart Chain. I think it will actually be to something that has higher throughput, something like Solana. But I think for now, it seems like Ethereum is going to stay in the lead, and I'm not actually worried that sort of these other L1s, even if they remain competitive ahead of rollups in the short term, I'm not super worried at this stage that will be the case in the long term. And I think there's also a lot of, just to keep going on the rollup theme, I think there's a lot of sort of misinformation floating around about what rollups are. I don't think people have been able to build up a lot of intuition as to why these are so important and so revolutionary. And for me, it took a long time to, there are a lot of articles out there, but a lot of them are pretty technical. I'm trying to write one right now that's like a non-technical introduction to rollups with the main purpose of building a lot of intuition as to what rollups are. I think the main key point to understand with rollups is that transactions lack finality on rollups. And, I'm sure you guys already know this, but this is just for the sake of anyone listening, transactions on rollups lack finality. There is this built-in review process for any rollup transaction that happens. It can be reviewed and then overturned by Ethereum such that whatever happens on the rollup chain isn't the, I guess, be all and end all. Versus, for example, a competing L1 or even a side chain, there is finality. So you do rely in sort of a very important sense on the security apparatus of those other chains. And if, for example, there is some malicious validator or some 51% attack and you happen to lose money, well, tough luck. That's the end of the day. Versus on a rollup, if a validator basically makes a bad, either erroneous or intentionally malicious attestation as to the future state of the chain, so it basically make a mistake or try to corrupt it, that can still be reviewed and overruled. It's almost like the Supreme Court. Ethereum remains the Supreme Court, and that's that's such a key point, I think, for me, because
the code is law, Ben, but the people are able to have a say in a, as you say, Supreme Court way of good for the community based if there is bad actors at play, or if there are things that happen that are negligible to, the better outcome, right? And so it basically takes away that ability of it allows the ability for community judgment of certain things, if you will.
Exactly. So Ethereum has this massive network of nodes right now. And obviously this is going to be, shifting over with EIP 1559, but there's I think over 8,000 nodes on the Ethereum network versus, BSC has about 20, right? That's a massive difference in decentralization and what it would take to corrupt the network. 51% of the network being 4,000 versus, 10. For side chains, it's a little bit different too, but still I think that the point remains that Ethereum has the sort of best consensus of I guess it's still proof of work, but sort of non-Bitcoin blockchains, Ethereum is sort of the reigning king right now. And so with rollups, the key point is that people say this a lot, but I don't think it's known exactly what this means. Rollups benefit from and contribute to, in a sense, Ethereum's security. They don't exist separate from Ethereum's decentralized security and consensus mechanism. They are sort of subordinated to it. And because of that, they are inherently safer. Rollups are limited. Rollups can't process transactions with finality, and they can't. If on a rollup chain you happen to sort of a validator makes a mistake, then that is basically reversed because either it's not going to be accepted into the rollup into Ethereum, or it'll be recomputed by the EVM, by the Ethereum virtual machine. So I don't want to harp on this point specifically because I think it probably, you and your listeners understand that at this point, but it was such a big breakthrough to me because there's such an important difference between that and between a separate blockchain whereby, you fully rely on the consensus mechanism of that blockchain. And you are fully sort of at the mercy of whether that chain remains decentralized and whether it remains secure. And so I think ultimately people talk about this scalability trilemma. You have security and decentralization and scalability. And that's sort of this classic trilemma, but I think it's actually a bit misconstrued here. So the classic thing is like, okay, well, Ethereum has security and decentralization, but it lacks scalability. And then you have something like Binance Smart Chain, for example, that has scalability, but it doesn't have decentralization. I think, and then rollups, for example, also have like are said to have like security and scalability, but they lack decentralization, because what happens on a rollup is like there's like this sequencer, this centralized sort of entity that processes transactions, and then you have these other validators that are almost like referees that can basically dispute the claims. This is specifically in an optimistic rollup, and that trilemma sort of implies that there's always something lacking in any of these solutions. But I think the funny thing is that with a rollup, actually you do get decentralization too, because the rollup doesn't have this finality. And so it does tap into Ethereum's decentralization. And I think also this idea of like decentralization being an important sort of third part of the trilemma on its own is also kind of misguided. 𝗵𝗵𝗴𝗵 Qureshi, who's at Dragonfly, is really like one of my favorite writers and researchers in the space. He wrote an article about a year ago about why decentralization inherently on its own is sort of overrated. It's a really interesting piece. I think if you're a decentralization maximalist, it probably challenges a lot of your biases. For me, it was interesting to read. But the sort of overarching point is that decentralization is only important insofar as it makes other desirable qualities possible. And so in this case, decentralization on its own isn't desirable. It's desirable if it makes security possible. And so, the fact that a rollup is, built with having the centralized sequencer that is processing transactions, and then having other validators basically that can referee and call it out if it's making if it sort of processes transactions wrong, that itself isn't a problem, because it doesn't create specific points of failure or attack surface. It can always be overruled again by Ethereum's consensus. So I don't think the fact that this is centralized is actually a problem, inherent problem. I think it's actually it's not factually wrong to say that rollups are more centralized than other sort of side chains or L1s, but it's sort of logically wrong, because people who say that rollups are centralized, and there was this guy actually, I think his name is Kevin from Avalanche, he put out this tweet saying that rollups are centralized databases. It's not that he's so wrong. I mean, I think that's like a very poor way of phrasing it. It's more that he sort of misunderstands the purpose of rollups. Rollups aren't these databases that are centralized. And if they're centralized because they're limited and can be overruled by Ethereum. And so that's like such an important sort of distinction, I think, to me and to my mind, that it really puts rollups above all these other L2s. And frankly, I wouldn't necessarily even call this is maybe controversial, but I wouldn't even call sidechains L2s, because sidechains don't really have these same limitations and can't sort of be overruled by Ethereum consensus the way that rollups can. I think also that's why you see people like Vitalik and other sort of Ethereum researchers gravitate more toward rollup solutions as opposed to sidechain solutions, at least from what I understand and from what I've been seeing.
Yeah, and when it comes to that scalability trilemma, it almost seems like you mentioned decentralization is only good insofar as that it supports security and gets you there. So maybe you don't have all three pieces of that trilemma with one L1 or rollups or any one of these technologies in particular. But once you start to link together Ethereum plus rollups, that's when you can start to hit all three of these
precisely
the trifecta, essentially.
Exactly. I think that hits the nail on the head.
Yeah, L2 is going to be the term that's going to be used for everything, though. Like, at least for now, just L2. Just if you're talking about anything scaling on Twitter or anything, everybody just says L2.
Well, I think that's because people don't really have like the insight into the different kinds of L2s, right? Because now, right on this podcast, we're starting to distinguish between side chains, which is Polygon, Binance Smart Chain. They lack the Supreme Court rulability that can tap into Ethereum's security and decentralization. So you have side chains like that, and then you have rollups, which are kind of a completely different animal, because they allow for the finality to be placed on Ethereum and not within their own like entity, like a side chain would.
I think that's exactly true, and I think people miss a lot of these really important distinctions. And we could also potentially get into the differences between optimistic rollups, between even some of the different solutions. I've been diving into that a lot.
Ben, we got to get you on a cast with Matt. He used to work a lot with Loopring. Matt
for sure.
is he loves rollups, and he's really good with it, man. If you haven't talked to him, we'd love to make the intro. You should just shoot him a DM on Twitter. He loves it.
For sure. This this stuff is fascinating, and I don't want to talk your heads off. So I'm sure
No, I mean, is one of your personal goals to like, try to bring rollups quicker, more effectively, and bigger to Ethereum? Like, is that something that you would say, out of all the community objectives that could be had, you could try to stick your head into a million different things, or is it something that you'd like to for sure, kind of go down that path?
For sure. I think I don't have the kind of technical expertise to be contributing on the code side, but what I do think is really important, crypto Twitter and in general, the crypto community, I think, for all of its, for all the pitfalls, and as much as, there are some times when things are sort of like a cesspool, it really is also like a place where there's open dialogue and debate. And I think a lot actually can be, there's a lot of value that comes from people discussing and debating different ideas and solutions. And, it's John Stuart Mill has this idea of like the marketplace of ideas. And I think, the crypto community, crypto Twitter, on the different governance forums, all these things, I think there really is a place for sort of spirited debate about, the best L2, why, for example, rollups might be better, or why they might be worse theoretically than other alternatives. And so for me, like the main goal for me when vis-a-vis rollups specifically is to make these ideas that I was discussing as clear as possible, because I think there are some articles that have been written. There are some good ones. I could even point. Vitalik wrote one of the best articles on rollups. But even Vitalik's article, I don't know if it's fully geared toward non-technical people. He talks about Merkle roots a lot. He talks about specific throughput measurements and like a lot of sort of more technical things. I think a lot of people might read that and their eyes might glaze over. So my goal for rollups first and foremost is to, and in general for Ethereum scaling, is to try to make this issue as crystal clear as possible, to try to clarify without losing some of the nuance and complexities that we were just discussing, but make it as crystal clear. And then, I believe this. I'm open to being, proven wrong, very much so. I'm happy to sort of change my biases. I hold my opinions strongly, but also somewhat loosely, in the sense that if I'm presented with better information, I'd like to think that I'd change my mind. But as of now, to me, these are clearly the best path forward for scaling. And this problem, Ethereum scaling really is, I think, what's holding back. When we think of what the next real stage is for DeFi, I can think of two different things. Like the first is, I think, actually usability outside of like just crypto native people. So I think, to think that people like normies are going to be using MetaMask and, putting gas limits and understanding what a nonce is, and, like having to deal with failed transactions and like, 40 character long Ethereum addresses. Like, I think that's like a little bit crazy. I think to think that like eventually normies are going to be using something that looks like DeFi today, that's, I don't know, that's a bit fantastical. I had like this, a family friend of my dad, he called me up, he was like, oh, like, I want to send my Bitcoin to 𝗀. And like, he almost gave me a heart attack, because you can't send your Bitcoin to 𝗀, you're going to lose your Bitcoin. Like, please don't do this, Bill. Like that would be really bad. And I wanted to help him, but like, it also reinforced to me, we're so deep into DeFi. We understand it's really like the back of our, the back of our thumb. We know DeFi so well, but for people who are coming into DeFi, especially older people and people who don't really have a lot of experience sort of with the internet in general, like there's no way people are going to be using that. So that's one. And then the second thing, of course, like the thing that's holding back DeFi is what we've just been talking about. It's, scaling. It's the fact that a lot of these applications are prohibitively expensive to use. And so, for me, it's like, well, people ask me, are you a DeFi fund? Like, why are you focusing so much on L2s? People don't actually ask me that, but I could see someone asking me that. And the answer to me is like, well, like DeFi isn't going to keep expanding and innovating and evolving in ways that we wanted to, unless we actually solve this sort of crypto-wide problem first, which is scalability. So it's not a non-DeFi problem. It really is a DeFi problem.
So somebody in our Telegram chat, after I told him that we were talking to a whale from a crypto fund, I said, yo, we're talking to one of the biggest whales in DeFi right now. They said, oh my gosh, we need to get some free alpha. So I said, okay, fine. So this is the question that they sent in live. We're talking live. So we're talking, I think it's going to be an easy answer for you here based off about the last half hours. We've seen the NFT wave and now the meme coin wave. What's the next wave, Ben? Can you tell us what the next whale wave is, you big whale?
I'm definitely not a huge whale, but I guess, look, we've just been talking about it, but I really do think like, I do think that scaling, Ethereum scaling will open up a lot of opportunities. And so I think there are some teams, for example, that are already looking into, the sort of mid IQ understanding is that like, a lot of the protocols are going to benefit from, speed and throughput, but the sort of higher gigabrain IQ approach is to say that, it's not just that these these solutions are going to improve throughput and they're going to sort of make transacting less costly. It's actually there's some second order effects of and trends that are going to sort of take place when you have these rollups. So for example, a classic one that people talk about is like, well, thinking about AMMs and other decentralized exchanges. And one of the reasons why, for example, order books are not very popular to use on Ethereum is simply because of gas prices. And so it's true that I think like that optimism is going to bring a lot of benefit to Uniswap and Uniswap v3, and others are going to be moving on, like Bancor is going to be moving on to Arbitrum, and there will be others as well. So that's going to be really interesting. But I think if you want to look for trends, what you want to do, I think, is think deeply about how scaling changes the game, not just sort of how it improves protocols in terms of what they already do, but thinking about new trends. So I think, like, for example, we're going to see an order book resurgence on layer 2s. I don't think it's actually going to be the case that AMMs are just going to fade into the background, but we might see some interesting new protocols that are sort of looking at hybrid AMM order books. There are already some that are sort of in the works and building, but I think like keep paying attention to sort of paying attention to teams that are not only building for the current state of Ethereum, but that are building for rollups, for layer 2s, and thinking deeply about how those actually change the nature of the game. They don't, not just how they make things better sort of in terms of the current state, but how they actually totally reset the table and rearrange the sort of the playing field. I think that's like I'm mixing all my metaphors here, but I think you understand what I'm saying. Like things will be awesome. Different on rollups. And I think, also thinking about, there's going to be a lot of alpha in thinking about the solutions that are cross-chain, and also in terms of withdrawals, because there will be some, as I said, there will be some I think some kinks to be smoothed out in terms of withdrawing from one rollup to another, withdrawing from rollup back to Ethereum, withdrawing from sidechain to rollup, withdrawing from L1 to other rollups, and like going all between these. I think so. There's some, there are already protocols that are working on bridging, but I think thinking about value capture on that level. And sort of which protocols are going to be doing that the best. That's another sort of thing to look for. So, I mean, yes, broadly speaking,
and what changes, as a result of the scaling, right? And then being able to like have your fingers in those pots, if you will, and be able to see that, like, what the future of scaled blockchains look like. And then, okay, once we have this, then what's the next thing that becomes super important?
Exactly, like second order effects.
Yeah, and I think that's a super interesting point. And honestly, my perspective has changed just while we've been on this call. I was kind of the mindset like, I don't know if, rollups are going to be super impactful when ETH 2.0 comes out and we have these different shards that people can move between like, kind of what we were talking about at the beginning. If fees are driven to zero, why do we still need to roll up things off chain to reduce fees further? But that isn't so much the case as I see it. Like, even when we're on ETH 2.0 and there's a bunch of different shards laid out here, you're still going to need to move between shards. And to do that is almost you're not going completely off chain, but you need to be able to roll up transactions to deploy them between different shards. And I think that's going to be something that's kind of unpacked as we get closer to ETH 2.0. But I think rollups are not going anywhere, and it's super interesting to see how they're going to play into kind of the long-term realization that we have on Ethereum.
For sure. And I think also, I think that's a great point, Rob. And I think also, I want to be clear to me, like in terms of my investment thesis on rollups and how I'm thinking about this as an investor, like, as I said, I don't necessarily think once Arbitrum launches, for example, I think it's going to launch before Optimism does that, there's going to be this immediate wave of people moving over to Arbitrum, and it's going to be this sort of like massive migration, and it's going to be Arbitrum is taking the lead over Binance Smart Chain. I think that's not going to happen, frankly. I would put my money on that not happening, not because I don't want it to, I think it should, but I just think this is going to take time. This is more of a mid to long-term thesis as the usability improves, as developers start to move over piecemeal. So that's, it's not that this is going to happen overnight at all. That's not, I think that would be unrealistic to expect. I think also it's important to say, like, someone might poke a hole in my thesis and actually what you were just saying, and say, look, like, regardless of what happens with rollups and with ETH 2.0, it's clear that there's going to be some sort of fragmentation of liquidity and protocols across these various different layers, whether that's across rollups, whether that's across shards. I mean, 𝗵𝗶𝗴𝗵 has already said that like rollups are going to play an important role as sort of the computation execution layer. But regardless, with this new paradigm that's going to be ushered in by rollups plus 2.0, regardless of how long that takes, there will be probably some fragmentation of liquidity And I think, I've heard a pretty good argument from people who are sort of bullish, much more bullish on Binance Smart Chain, on Solana, and sort of other L1s, or you might call them sidechains or L1s. I would say, I guess, L1s, but that this fragmentation on Ethereum is actually going to weaken Ethereum a great deal. And it's actually going to allow Binance Smart Chain to continue flourishing. It's going to allow Solana to continue flourishing. And that Ethereum is going to sort of have its network effects weakened because of the fragmentation of applications. I think also potentially some people think that we're going to be moving towards sort of broadly speaking, industry-based like applications, or sorry, not applications, industry-based like blockchains or rollups. So like there's going to be one that's sort of one rollup or one like side chain that's going to be specifically for NFTs, and that's sort of, it's going to be focused on NFTs, and then the other is going to be focused, one other one's going to be focused on DeFi specifically, or maybe one specific part of DeFi. And that's, I don't have actually a strong opinion as to whether that's correct or not. It doesn't strike me immediately as what's going to be happening first. It's also hard for me to think that like these specific rollups are going to be specifically tailored, or these specific scaling solutions are going to be tailored for specific types of applications. That's another thesis. I guess the other thing, and this is a point that Andrew makes, I think he's right about. Thinking about like rollups and usability. One thing, you were saying this to Andy. Like I think, the fact that you can, like, centralized exchanges are really an important sort of, I don't know if they're, I would say, a bottleneck, but they really are sort of still a linchpin of the entire DeFi ecosystem. Even if people don't use centralized exchanges, a lot of like the fiat on-ramps are primarily through centralized exchanges. And so it's really easy, for example, for Binance users to use, to withdraw their fiat from Binance, specifically like non-US users, into Binance Smart Chain. And, for Andrew says, this is, I think, a good point that he makes, that, until rollups have sort of native on-ramp solutions where you can go from, let's say, Coinbase to a rollup, or from Binance to rollups, or FTX or whatever, it's going to be more difficult if you have to go from, Binance to Ethereum to rollups versus, Binance to Binance Smart Chain. That's just like one less step. And my counter is, well, I think like Hop and Connext and some of these other sort of cross-chain solutions are actually going to be able to sort of plug that hole, and eventually even integrate with exchanges themselves. But this is sort of an open question too. And so there's, I think, a lot of granularity, and these are sort of very specific points, and this is the nitty-gritty stuff that we get into when we debate this, because we have to sort of come up with an investment thesis and for our own fund, and we still sort of in the process of refining it, sort of always constantly refining it. But these are some of the questions that we think about, not just sort of the broadly speaking, decentralization, but also really just like very, very minute usability details. And I think, those are really important to think about as well.
Yeah, our last podcast, actually, we were talking to Agni from DGate, and she was working on that exact problem, is how to plug a solution from a fiat on-ramp directly to a rollup without hitting an L1 in between. So it's going to be interesting to see if they can pull that off.
Gotcha. Yeah, I have to listen to that. That sounds awesome.
Yeah, if you just pump ETH to the moon, then all the problems will be solved, right? Because Ben and Rob are big ETH whales.
Yeah.
Well.
Yeah, I think we're almost out of time. But one thing you mentioned that I don't know, it would start a whole nother conversation, so I don't think we can get too deep into it. But the fragmentation of liquidity that you talked about, that is a result of these different scaling solutions. It's positive to Ethereum and kind of UX overall, because you're decreasing gas fees, so you think that there's more usability. But I hear what you're saying about kind of the fragmentation of liquidity and being spread across different shards or different rollups, and how that could hurt Ethereum's value proposition. To me, does that hinder composability, or is really the detriment here that fragmenting liquidity starts to reduce incentives because it's not all cooped up in one composable place? Just maybe a quick parting thought.
Yeah, I think it does both. I think it reduces composability because, if you don't have liquidity, then composability is almost like an empty thing. Yes, you can like have, compound USD plugged into, Uniswap on Arbitrum or whatever it is. But if there's no liquidity for, any of this stuff, or if you can't, if you can't use, if there isn't any liquidity on these decentralized exchanges, then it doesn't really matter that like the applications themselves are composable. So I think, you know, in terms of incentives and liquidity, I think that's sort of what's key for composability. And I think we'll probably see also, and this is maybe again, you know, back to the question of alpha. I think we already are seeing a lot of incentives ramp up. For example, on Polygon, you know, 𝗵𝗶 has launched their liquidity mining program. I think Curve actually just today, recently, unless I'm mistaken about that. But there's going to be a big ramp up of liquidity mining and yield farming incentives, I believe, on these you know, rollup solutions, sidechains, in part because
Polygon.
Polygon.
Get over there and get on 𝗵𝗶.
Yeah, because these applications realize, and rightfully so, that just putting their application out there, if they learned anything from DeFi summer, it's that these applications need to bootstrap usage and they need to bootstrap liquidity. And so it's going to be key for these applications to have war chests that they can use to incentivize liquidity on their new solutions. For example, I would not be surprised, maybe this is a prediction, but I would not be surprised to see Uniswap maybe turn back on their liquidity mining incentives on Optimism. I think that's like a pretty good bet to think about. I mean, I don't know exactly what they're planning on, and it's also, I guess, a decentralized governance platform. So they've had their own problems with that.
𝗵𝗶𝗴𝗵 Ben knows what's coming.
I have no idea. This is purely a prediction. But I would not be surprised if Uniswap. I mean, I'm sure like, you know, SushiSwap has sushi incentives. So I would not be surprised that if and when sushi moves to a layer 2, they're going to also have, you know, some sort of sushi incentives on that layer 2. Again, I'm just like throwing out predictions. But back to also, you know,
𝗵𝗶's has never done any sort of liquidity mining in the last, like, say 6, 8, 9 months that I've ever used them. It may be prior to my experience, but I don't think so. Now they have liquidity mining on Polygon that I was just hollering about, where you're currently getting paid to borrow in 𝗵𝗶.
Yeah,
the 𝗵𝗶 APY is outpacing.
Yeah, it's similar to compounds, like recursive, like lending and borrowing a little bit. I think they capped the recursion for 𝗵𝗶. I'm not positive.
But you were going on about how Uniswap was, and then
and also I think so. On the question of like fragmentation, you know, I think in this scenario where there's like all these different rollups and their applications sort of spread across rollups and there's liquidity spread across rollups, I think the fragmentation thesis and that sort of bearish thesis, I think, because I think it probably would be bearish for at least for the usability of DeFi and the composability of DeFi. I think that comes into play. But I think, you know, even though people say that among the applications, it may not be a sort of winner take all race, I think you might actually see that among rollup solutions and among layer 2, it might look more like winner take all than it does currently between different applications. You know, which is to say that, will it really be the case that there are going to be sort of 3 or 4 or 5 optimistic rollup solutions, each with their own, you know, liquidity? No, I think probably more likely there's going to be 1 or 2, and maybe just 1. And then maybe when ZK rollups are network ready, they're going to be challenging. And I guess to clarify, ZK rollups are sort of already network ready. But for example, if you look at 𝗬𝗬dx, which launched on Starkware, 𝗬𝗬dx is currently subsidizing gas fees, which they can do because I think they have enough money to, but I think a lot of protocols don't. That's an important caveat into what I'm saying in terms of like being network ready. I mean being network ready in terms of having low gas fees without having that subsidy come from either the Starkware treasury or from the 𝗬𝗬dx treasury or whatever is using it. But to go back to this, you know, question of like winner take all versus not, I do think that things eventually might look more like winner take all than they do on the rollup level and on the sort of layer 2 the rollup level or the layer 2 level than they do on the sort of application level, which might still continue to see a proliferation of sort of competition in different applications. In which case, I think the fragmentation thesis maybe doesn't come into play as much as we've been talking about. And I guess the question of sharding is separate from there, but that's, I guess, just with regard to rollups.
And to go on the second order of that, then the investment thesis can be, okay, let's find these cross-chain compatibility projects and solutions. And Ben's got a smile on his face, which you guys can't see right now, but I'm sure he's been balls deep in research for the past month about this stuff.
Yeah, and it's I mean, first of all, again, but I should have said this earlier. None of what I'm saying is investment advice. Like, do your own research. And this is definitely not investment advice. But I do think also, and it scares me a little bit about this because I think this thesis about rollups, especially optimistic rollups, and in general, this thesis of sort of ETH remaining dominant and sort of keeping its sort of, you know, lead, and it's still, even with BSC's liquidity, it's still a very vast lead if you look at the applications and the quality of the applications on Ethereum. I think a lot of this does hinge on the success of these cross-chain infrastructure, at least at the beginning. if, at least at the beginning, while there is this sort of I guess proliferation of multiple different rollups, and like there is going to be some fragmentation, I think. So it's going to be interesting to see whether these actually succeed in practice, and whether they're usable, whether they're capital efficient. I'm hoping that they are.
Yeah.
I think that they are. We've dug into some of them. But I do think, like, you talk about optimistic rollups, and I tell people, well, yeah, optimistic rollups have like a 1 to 2 week withdrawal wait time, and people sort of laugh, and it's true, they should laugh, because there's no way crypto native users are going to put up with wait times longer than like Swift banking or something. Like that's ridiculous. But
well, that's
it's
a feature,
first of all,
right? Like that's the finality that we're talking about. It gives people like the Supreme Court.
Sure.
Rules.
People
that's
still don't care.
Necessary because that's like the review process, if you will. It's the challenge. It's like the challenge. The challenge period for disputes to arise, and for like EVM to resolve any disputes if need be. But it's also the case that that's a solvable problem, because anything that happens on a rollup is essentially transparent. So you can already see if something is challenged on a rollup, and this is another really key point for how a lot of these rollups work. If any transaction is challenged on a rollup and it triggers this sort of dispute resolution process, which takes a week or two, you can still know, like me and you and any other validator can run a transaction, or we can sort of know ahead of time, before that actual resolution, that finality happens, what is going to be the proper, what is going to be the outcome of that. And what that means is that market makers, or if it's MakerDAO or anything else, they can essentially provide a fast withdrawal solution, even if there are disputes, because you can sort of know ahead of time what the outcome of that dispute is going to be. Now, the outcome isn't finalized on Ethereum for 1 to 2 weeks, but it means that if you really want to get your DAI off of Ethereum, and there's a dispute, it doesn't necessarily matter. You can still and there's this sort of dispute possibility. It's still possible for you to take your DAI off faster, because market makers and anyone else who's sort of like surveying or sort of monitoring the chain can see what disputes are arising, like whether the transactions that were processed are valid. And so those market makers can almost extend you a line of credit, I guess, in this sense, because they know that the transaction will be final in 1 to 2 weeks. And like, there's no question that it will be final. It's just that it takes that time, because you need to have that built-in review process, like you're saying. So this, I guess, to me, that was an important point. And maybe I didn't explain that super well. I'll try to explain it better in writing. But the point, I guess, is like, this 1 to 2 week withdrawal time, as Rob said, perfectly, it is necessary for optimistic rollups. This is what allows for this, Supreme Court, judicial review process. But it's also the case that this problem is solvable from a user standpoint, because fast withdrawals can be provided because of the transparency of these rollup chains. Because any transaction that happens, you can sort of know immediately whether it's valid or not. And a market maker will sort of not market makers can provide sort of liquidity when they want to. So that's like, I guess that's the basic reason for why like 1 to 2 weeks won't be prohibitive. They won't like, if you truly want to withdraw your liquidity from like a layer 2, you will be able to, I think, utilize some of these fast withdrawal solutions, and it won't take 1 to 2 weeks.
Yeah, and like you said, it's pretty much instant that you can determine what the outcome of that solution is, even though it's going to take a week to finalize on chain.
Exactly.
But that still leaves room for ZK rollups, right? Because they don't have a review period.
Yeah, so ZK rollups are really interesting too, because like you said, they don't have a review period. Like it's this almost like this guilty until proven innocent, or innocent until proven guilty. So like the fraud proofs, meaning like the optimistic rollups, assume every transaction is fine unless there's a dispute, and you can dispute anything, but otherwise they're just sort of going to be included in the blocks without dispute. Versus like ZK rollups have this guilty until proven innocent like ethos or mentality, whatever it is, in the sense that like Ethereum will only include transactions processed by a ZK rollup if those transactions can be cryptographically verified. And so there are these quote unquote validity proofs that are sent back that accompany these ZK processed transactions. And these validity proofs are cryptographic. I guess they're snarks or starks for starkware, and these can be run by the Ethereum virtual machine and can be sort of used to instantaneously validate the transactions that occurred in the rollup. So you don't need this review process, and it provides actually potentially even more cryptographic validation. Again, the ultimate problem here is that these are gas inefficient, and that's like they sound perfect in theory, and I think they ultimately might be the long-term future, but they're not I don't think they're ready to be the future right now.
Right, they sound great from a security standpoint. I mean, it's
and also from a usability, exactly, because there's not like this withdrawal time too.
Yeah, but you don't want to get too far away from like why you're even rolling up to begin with, which is to reduce the gas fees.
Exactly, I totally agree.
All right, Ben, this was awesome.
Ben, you're the absolute man. We're all giga whales in spirit here, and we seriously appreciate you coming on, man. It was an absolute pleasure. And yeah, man, let's absolutely crush it. Keep doing, keep kind of trailblazing your own path, and sooner than later you'll be able to look your mom in the face and say, "Mom, I dropped out of Harvard." Not, "Mom, I'm going back." All right, I promise you, it's coming soon.
Maybe you can have that conversation with her on my behalf. Yeah, this is great. Thanks so much, Robin. Andy, this is such a pleasure.
Yeah, Ben, this was awesome. Thanks for coming on.
Thanks for listening to the DeFi by Design podcast. Until next time, DeFi Slate Team.